Imagine for a moment that the cavernous, humming Bitcoin mining farms of yesterday, once written off as relics of a fading crypto gold rush, are suddenly the beating heart of the artificial intelligence revolution. It might sound like science fiction, but this is no fantasy. It is the unfolding reality in the world of global technology and finance, and it is setting the stage for a multi-billion-dollar upheaval that could reshape the digital landscape for decades to come. What forces are driving this seismic shift? Who stands to gain? And who risks being left behind in the dust? Let's dive deep into the story behind one of the most dramatic pivots in tech history and explore how the battle for data center dominance is redefining the future of artificial intelligence, cryptocurrency, and high-performance computing all at once. To truly grasp the magnitude of this transformation, we need to rewind to the origins of both CoreWeave and Core Scientific, two companies whose unlikely journeys mirror the volatility and innovation of the entire digital economy. Both began their lives chasing digital treasure, operating immense warehouses filled with specialized servers engineered for the relentless mining of Bitcoin and other cryptocurrencies. In the heyday of crypto, these mining farms were veritable gold mines, consuming more electricity than some small countries and earning vast fortunes for their operators. But as the wild swings of the crypto market began to erode profits, and as the world's attention shifted from blockchain to the explosive rise of artificial intelligence, both companies faced a stark choice: adapt or die. Rather than fading into obscurity, CoreWeave and Core Scientific made a daring pivot. Instead of devoting their formidable computing power to the ever more competitive and energy-hungry world of crypto mining, they chose to repurpose their assets to serve the insatiable demands of artificial intelligence. The timing could not have been better. As AI applications, from language models to autonomous vehicles, began to dominate headlines and attract torrents of investment, the need for powerful, scalable, and efficient computing infrastructure reached unprecedented heights. The world's biggest tech companies, hungry for more processing power, suddenly found themselves in fierce competition for the same resources that Bitcoin miners once monopolized: high-performance GPUs, vast tracts of server space, and gargantuan supplies of electricity. Enter CoreWeave, a company that, almost overnight, became one of the fastest-growing providers of AI infrastructure in the world. Backed by a close, mutually beneficial partnership with NVIDIA, CoreWeave has built a reputation for deploying more than 250,000 of NVIDIA's most advanced GPUs, making it a crucial player in the ever-escalating arms race for AI computing power. On the other side, Core Scientific, a company that not long ago was grappling with bankruptcy, managed to reinvent itself as a powerhouse in its own right. With a national network of data centers boasting more than 1.3 gigawatts of computing capacity, Core Scientific quickly emerged as one of the leading suppliers of high-performance computing space, not just for itself, but for other ambitious players like CoreWeave. But the real bombshell came when CoreWeave announced its intent to acquire Core Scientific in an all-stock deal valued at an astonishing $9 billion. A move that sent shockwaves through both Wall Street and Silicon Valley. The offer represented a jaw-dropping 66% premium over Core Scientific's share price at the time, signaling just how fiercely competitive and valuable the AI infrastructure market has become. For some, this was the ultimate power play. By acquiring Core Scientific, CoreWeave would instantly add more than 1.15 gigawatts of power capacity to its arsenal, while gaining control of a sprawling network of data centers strategically located across the United States. Michael Intrater, the charismatic CEO of CoreWeave, summed up the logic behind the deal with characteristic bluntness. Owning this foundational layer accelerates our strategy to deploy AI and high-performance computing workloads at scale. In other words, this is not just a play for money. It is a bid for survival in an environment where only the biggest, boldest, and most adaptable companies can hope to thrive. By bringing Core Scientific into the fold, CoreWeave aims to eliminate more than $10 billion in leasing costs over the next dozen years, and to secure direct control over the physical infrastructure underpinning the AI boom, from the cooling systems that keep GPUs humming, to the power lines feeding entire campuses. Yet, for all its promise, the deal is fraught with risk. About 40% of Core Scientific's data center capacity, roughly 500 megawatts, is still devoted to cryptocurrency mining. Pivoting this vast trove of specialized hardware and real estate to serve AI workloads is no trivial task. It will require massive investment, technical ingenuity, and the delicate management of two distinct corporate cultures. One forged in the feverish world of crypto speculation, the other honed by the demands of enterprise AI clients. As Adam Sullivan, CEO of Core Scientific, put it, Together with CoreWeave, we will be well positioned to accelerate the availability of world-class infrastructure. But the path from promise to performance is littered with obstacles, and not everyone is convinced that CoreWeave is getting a bargain. Analysts at Cantor Fitzgerald have openly questioned the valuation, arguing that Core Scientific is worth more than $30 per share, well above what CoreWeave is offering. The market's reaction has been telling. CoreWeave's own shares slipped by 4.5% after the announcement, while Core Scientific stock tumbled by a staggering 22%. Some interpret these moves as a sign of investor nervousness, with doubts swirling around whether the integration will proceed smoothly or whether the inflated price tag might prove unsustainable in a market where competition from trillion-dollar tech giants like Amazon and Google is only intensifying. Let's break down what's at stake here. The combined entity would command an unprecedented network of data centers, with the potential to support more than 2 gigawatts of total power once expansion plans are realized. For context, that is enough electricity to power more than 1 million average American homes, or to run some of the world's largest supercomputing clusters. This level of capacity is critical for training and running the latest generation of AI models, which require ever larger datasets, more complex neural networks, and exponentially increasing compute resources. But raw power is only part of the equation. The real challenge lies in transforming facilities originally built for crypto mining, optimized for high-density, repetitive computations, into flexible, efficient environments capable of handling a dizzying array of AI and high-performance computing workloads. This means investing in advanced cooling systems, upgrading power distribution, and ensuring robust cybersecurity. It also means convincing AI developers and enterprise clients that CoreWeave can deliver reliable, world-class performance on par with, or exceeding, that of established hyperscalers. The stakes are enormous, not just for the companies involved, but for the entire tech ecosystem. If CoreWeave can successfully integrate Core Scientific's assets and rapidly convert its crypto mining infrastructure, it could leapfrog mid-tier competitors and establish itself as a credible rival to the likes of Amazon Web Services, Google Cloud, and Microsoft Azure. The payoff is potentially massive. According to industry analysts, CoreWeave's revenue grew more than 8-fold last year alone, thanks to the surging demand for AI compute. With AI applications permeating every sector, from healthcare and finance to entertainment and logistics, the hunger for high-performance infrastructure shows no signs of abating. But the road ahead is fraught with uncertainty. Regulatory scrutiny is likely to intensify, especially as concerns mount about the environmental impact of ever-expanding data centers. The combined company will need to secure sustainable energy sources to avoid tipping into ecological crisis, a challenge that has already sparked fierce debate in regions where data center growth has strained local power grids. There are also questions about whether CoreWeave's all-stock deal, which values Core Scientific at roughly $20.40 per share, can withstand the volatility of financial markets. After all, Core Scientific had previously rebuffed an earlier offer from CoreWeave, deeming it undervalued, a reminder of just how quickly fortunes can shift in this turbulent sector. For investors and tech professionals alike, this merger offers a powerful lesson in the art of strategic adaptation. Both CoreWeave and Core Scientific began as Bitcoin mining outfits, chasing the unpredictable winds of crypto speculation. When that market cooled, they had the foresight and the courage to reinvent themselves, pivoting toward the white-hot opportunities in AI and high-performance computing. Their journey underscores a fundamental truth in technology. The only constant is change, and those who can pivot quickly are best positioned to capture the next wave of growth. Let's zoom in on what this means for the broader market. If CoreWeave's gamble pays off, it could set a precedent for other Bitcoin miners looking to repurpose their vast, energy-intensive infrastructure. Already, Bernstein analyst Gautam Chugani is predicting a domino effect, with miners across North America and beyond exploring ways to convert their facilities for AI and HPC workloads. This could trigger a fresh arms race for GPUs, data center real estate, and sustainable energy contracts, pushing up prices and sparking new rounds of innovation. But failure would come at a steep price. If technological integration drags on, or if regulatory headwinds intensify, CoreWeave could find itself outmaneuvered by deeper-pocketed rivals. Giants like Amazon, Google, and Microsoft have the capital, expertise, and global networks to steamroll smaller players who stumble. The lesson here is clear. Bold moves can yield spectacular rewards, but only if backed by flawless execution, relentless innovation, and the ability to navigate the ever-shifting sands of regulation and market dynamics. For those working in tech, investing, or simply watching the future unfold, several practical takeaways stand out. First, Pay close attention to the blurring boundaries between technology sectors. Today's crypto miner could be tomorrow's AI powerhouse, and the skills needed to thrive in one arena are increasingly transferable to another. Second, keep an eye on companies focused on solving the energy puzzle. As data centers consume more and more power, firms that pioneer sustainable solutions, whether through advanced cooling, renewable energy contracts, or innovative grid management, could emerge as the next breakout stars. Third, consider the ripple effects on local economies and job markets. As data centers proliferate, they can drive demand for skilled workers in engineering, construction, and IT, while also raising important questions about environmental stewardship and community impact. Let's not overlook the human stories behind these corporate maneuvers. At the heart of CoreWeave's meteoric rise is its partnership with NVIDIA, the undisputed leader in GPU technology. CoreWeave was the world's first to deploy NVIDIA's Grace Blackwell Ultra superchip systems, giving it early access to hardware that promises to redefine the limits of AI performance. This relationship is more than just a vendor-client arrangement. It is a strategic alliance that enables rapid experimentation, agile scaling, and the ability to bring bleeding-edge innovations to market ahead of the competition. For NVIDIA, having a nimble, aggressive partner like CoreWeave provides a proving ground for its latest products. While for CoreWeave, the partnership offers a direct pipeline to the world's most advanced compute engines. But even the best hardware is only half the story. Success in this new era will depend on CoreWeave's ability to foster a culture of innovation, attract top engineering talent, and build the trust of enterprise customers accustomed to the reliability and scale of the biggest cloud providers. The integration of Core Scientific's operations brings both opportunity and challenge. On one hand, CoreWeave inherits a vast network of facilities, a seasoned team of data center engineers, and a trove of existing customer relationships. On the other, it must navigate the complexities of merging two companies with different histories, corporate cultures, and strategic priorities. The potential for culture clash or operational hiccups is real, and management will need to be agile, transparent, and laser-focused on execution. Let's also consider the global context. The convergence of crypto and AI infrastructure is not limited to North America. Around the world, mining farms in regions from Scandinavia to Kazakhstan are exploring similar transitions, driven by the lure of higher margins and longer-term stability in AI and HPC. In China, where government crackdowns have squeezed the crypto sector, many former miners are retrofitting their facilities to host AI startups and cloud computing ventures. This trend is accelerating as nations race to build sovereign AI capabilities, secure supply chains for critical compute infrastructure, and attract foreign investment. Zooming out even further, the CoreWeave Core Scientific merger reflects a broader historical pattern: the relentless repurposing of industrial infrastructure in response to technological shifts. Just as abandoned factories of the industrial age were transformed into data centers and creative hubs, so too are the digital minds of the crypto era being reborn as the backbone of artificial intelligence. This cycle of creative destruction and reinvention is the engine of progress, but it also brings disruption, uncertainty, and new forms of competition. So, where does this leave us? As CoreWeave and Core Scientific race to finalize their merger, expected to close by the fourth quarter of next year, barring regulatory surprises, the eyes of the world will be watching. Will this bold gamble pay off, vaulting CoreWeave into the ranks of tech titans? Or will the challenges of integration, market volatility, and regulatory scrutiny prove too great? The answer will shape not just the fortunes of two companies, but the direction of the entire digital economy. Here's what you, as a viewer and participant in this unfolding story, can do. Stay informed about the evolving landscape of AI infrastructure. Watch for signs of further consolidation, as more Bitcoin miners and data center operators seek to reposition themselves in the age of artificial intelligence. Pay attention to innovations in sustainable energy, as the race to power ever larger data centers intensifies. And if you are investing, working in tech, or planning your next career move, remember, the winners in this new era will be those who can adapt quickly, think creatively, and seize opportunities at the intersection of old and new technology. Let's recap the stakes. CoreWeave's $9 billion bet on Core Scientific is more than just a merger. What is a harbinger of a new era, where yesterday's crypto mines become tomorrow's AI supercomputers? If the integration succeeds, CoreWeave could set the standard for how digital infrastructure evolves, inspiring a wave of copycats and challengers across the globe. If it falters, the deal may go down as a cautionary tale, a reminder that in the high-stakes world of technology, fortune favors the bold, but only the prepared. As the dust settles, the only certainty is that the future will belong to the innovators, the visionaries, and the relentless adapters. Now, we want to hear from you. Do you believe that CoreWeave's audacious move marks the dawn of a new era, where the boundaries between crypto and AI blur into a single, unstoppable force? Or do you think the risks outweigh the rewards, and that CoreWeave may be biting off more than it can chew? Share your thoughts in the comments below, and join the conversation shaping the next chapter of the digital revolution. Don't forget to subscribe and hit the notification bell to stay ahead of the next big tech shift. From the rise and fall of Bitcoin mining to the explosive ascent of artificial intelligence, we will keep decoding the moves that shape our digital world. Thanks for watching, and see you next time as we